Management at Arka Jain University in association with the Research Foundation of India. Today's session is titled Empowering Philanthropy, Tax Implications and Incentives for Charitable Trust under the Income Tax Act 1961, which focuses on an area of taxation that has profound implications for societal development and philanthropy. We are honored to have with us Mr. Manish K. Agarwal, who will be leading this session. Mr. Agarwal is a chartered accountant and a corporate tax senior consultant at EY, one of the leading professional services firm in the world. He also serves as an IT faculty at ICAI Jamshedpur chapter, where he has been instrumental in imparting knowledge and skills to future professionals in the field of taxation and finance. With his vast experience in corporate taxation, Mr. Agarwal brings a deep understanding of the complexities and opportunities that tax regulation offer to charitable organizations. Today, he will guide us through the intricacies of tax implications and incentives available to charitable trusts under the Income Tax Act 1961. He will discuss how strategic planning can empower philanthropic organizations to maximize their impact, leveraging tax benefits to support their social and charitable missions more effectively. This session is particularly relevant for professionals and organizations looking to enhance their understanding of the tax landscape related to the philanthropy, and for those also seeking to make informed decisions in the realm of charitable contributions. We are excited to have Mr. Agarwal with us today, and I'm sure his insights will provide valuable guidance to all of us. So, without further add ons, let us welcome Mr. Manish K. Agarwal to lead us through this important session. Over to you, sir. Thank you.
Thank you, Praveen, for that wonderful introduction. And thank you to the RKJ University and the RFI India for for giving me this opportunity to come and present my views on the topic of charitable trust, which I believe is one of the most complex topics in your income tax law and vice versa. So before I start in, I'm not sure how many are there uh, on the YouTube live because I can't see that. But before I started, I would just like to share the screen because I believe something is there on the screen will make the audience more excited, more uh, excited to have a look at what I want to uh, convey in the session today. Just a minute. Yep, yep. I hope the screen is visible to all.
Yes, sir, it is very much visible.
Yeah, thank you. Just a minute. Yeah. So before I start in the topic of charitable trust, it's I believe it's a very requirement or it's very important to understand what do you mean by a charitable trust and what are the laws, what are the legislations basically which govern the functioning of a charitable trust in India. So a charitable trust or you can say a religious trust is nothing but an entity, is a legal entity formed by some legislation. The purpose is solely for the betterment of the society. In simple terms, I can say it is the purpose of forming any charitable trust is to give back to the society in terms of charity, could be your If I talk about what do you mean by charity, it could be a relief of poor, could be a medical relief in forms of hospitals or clinics providing free or very low cost healthcare services. It could be your some yoga services, could be your some uh, activities which help to protect the environment or the monuments in India. Let's say the example of Taj Mahal or any activities. The purpose or the object is to serve the society or to to ensure the betterment of the society. So this is a very brief understanding of what do you mean by a charitable trust. Okay. So if I talk about from today's session is completely about your Income Tax Act and your implication as per the Income Tax Act on your charitable trust. Okay. Before we start in, there are a lot of legislations which you can see on the screen which govern your charitable trust. The most important being your the Society Registration Act of 1860. Second important being your Indian Trust Act 1882. There are a lot of other trusts, other legislations which govern the working of a charitable trust, but these two are the central legislation which govern the entire India. Then there are some state-specific legislations which also govern a trust or society registered in that particular state. Let's say the example of a Bombay Public Trust Act 29 of 1950. So all the trusts registered society are there in Mumbai or Maharashtra. They are governed by this trust and they are not governed by the Society Registration Act 1860 or Indian Trust Act 1882. Then, apart from this, there is a very important legislation, FCRA Act or Foreign Contribution Regulation Act, which is a 1976. This particular legislation, if I were to give a brief understanding, it basically talks about your foreign contribution or foreign donations. Since you are a trust, you must receive or you should receive some donations so that you have some funding basis which you can carry out the charitable activities. Many a times you get such donation within India. Many times you get such donation from entities or companies outside India from foreign land. If you are receiving something, some contribution, some donation from a country outside India, then FCRA regulation 1976 will get triggered, and there are a lot of compliances which has to be made under this FCRA Act. Okay, yeah. Before I starting, you can say to deal with your income tax implications on a charitable trust, it is very important for us, firstly, to understand what is a working structure or what are the elements of a trust. Okay, because see, if I talk about a company, since all are MBA students or person for finance, so we understand what is a company, we understand what is a proprietorship, we understand what is a partnership or an LLP or a LLC if I talk about for Dubai or your for US entity. But if I talk about trust and how a trust is formed for society, so whenever I use the word trust, so you can understand I am also referring to society. Okay. So in terms of trust, if I talk about the working structure of a trust, it contains a settler or also known as the author of the trust. So basically a settler is the person who, is, who wants to form a trust. Okay. Let's take the example Tata Steel. So people say uh, we are mostly people are from Himshire, so they know about Tata Group and how much they contribute to the society. Okay, a company known across the globe and the charitable activities, the philanthropy activities that the Tata Group does, we all are aware of. Okay, so if I talk about your trust structure, so there is a person, a settler, let's say an example, Tata Steel. Of course, Tata Steel wants to start a trust, a charitable trust for the betterment or to provide some medical relief to the people of Jamshedpur. Okay, so Tata Steel will form a trust via a trust deed wherein they will transfer some property or some, you can say, some corpus fund in the trust. Okay, that trust will have some trustees who will carry out the activities of the trust. Let's say that example, the Tata Steel wants to open a trust, a eye clinic, a clinic wherein the people from Jamshedpur can get all the eye related treatment at an affordable price. Okay. So Tata Steel will donate or will contribute some purpose fund in the trust. Let's say the example, a rupees 1 lakh to form a trust. Let's say the example, I have to give some example, eye hospital. The trustees, the first trustees are people whom are appointed by or formed by or you can say appointed by your settler or Tata Steel in the case, who will carry out the activities of the IFSL. They will ensure all the administrations are there, all the procedural activities are being carried on, and all the payments and all the receipts, everything they will take care of. Then you have a settler, as I talked about, you have a trustees, then there will be some beneficiaries. So beneficiaries are the people the whose benefit a trust is formed. Okay. It could be a general public. In case of a charitable trust, it is a general public, no doubt on that. Okay. So in a nutshell, if I have to give you a brief understanding what is a charitable trust or a working or a structure of a trust, it has a settler who forms a trust, transfers the property or some corpus fund in the trust. There are trustees who are appointed by the settler who will carry out all the activities of this trust. It could be your charitable activities, could be your uh, whatever activities the particular trust is formed. It could be your medical relief, it could be a relief for education purpose. The trust could form a school which it can provide benefits or you can say education services to the poor in India. That could be a charitable trust, a charitable activity the trust can do. Then they are beneficiaries. Beneficiaries, again, a person whose benefit the trust is from. In case of charitable trust, uh, or could be or it should be only a general public. So, one question I have, it's just a food for thought. No one is required to answer, just a food for thought. A person, suppose ABC, Messrs. ABC and company was to start the trust, okay, wherein they will provide education facility to all the employees of that company. For example, ABC Limited is a company, suppose they are registered in West Bengal. Okay? It has around 1,000 employees, and to ensure that the education of all the children of the employees are undertaken in a very good way. Okay, so they form a trust. The purpose is to undertake the education faculty or facilities of the employees of ABC Limited. Okay, is this can be termed as a charitable trust, or can I say, sorry, or can I say the activities which are being carried by ABC Limited to provide education to the employees? It could be a very affordable education at a lower cost to the employees, or rather to the children of the employees of ABC Limited. Is these such charitable activities? Think over it and you can let me know on the comments. Yeah. Now I will just move to the next understanding of trust. Okay. So a trust could be two types. One is a private trust and then is a public trust. If I talk about public trust, it is nothing but the charitable trust which we are dealing in detail in today's session. So public trusts are nothing but trusts which are formed for the betterment or for the society at large. A private trust is nothing but a trust which is formed by mostly families. Okay. Families create a trust and they transfer the properties in the trust. Okay. And trust is one of the option, or you can say one of the modes through which business settlements are done. Family business settlements are done. Okay. So I will not touch a depth on private trust because this is another huge topic, okay, which requires a lot of understanding the background. So for the time being, I will just keep myself restricted to the understanding of public trust or a charitable trust. Yeah. So as I said in the very beginning, there are a lot of legislations which govern a trust or a society. For society, if you are a society, There's a central act known as the Societies Act 1860. If you are a trust, there is a central act known as the Indian Trust Act 1882, which governs the functioning and the workings of the trust in India. Apart from that, there is also a very famous, you can say, body or a form, an entity which are formed to carry out the charitable activities known as your Section 8 companies or NGOs or non-profit organizations. I believe everyone has heard about your NGOs or you can say of NPO, non-profit organizations, which carry out the charitable activities. So if you have heard about companies that will own clothing, so there's a section 8 which specifically talks about those entities which are formed for non-profit organizations for non-profit or they carry out the activity with the motive not to earn profit, rather for the betterment of the society or to give something back to the society. Okay. So if I talk about, so whenever you are hearing the term uh, trust or society, keep one thing in mind that they are formed either if they are a trust, it is formed by Indian Trust Act 1882. If it's a society, it is formed by your Indian Society Act 1860. Or if it's a company, okay, then you will find a lot of companies in the sector. If it's a company, it will be governed by Section 8 of your company. That would be it would be, yeah. So we have read or we have understood a lot about your trust, public trust, or your charitable trust, and also your elements or your functioning or your, you can say, the structure of a trust. Okay. Uh, Now we just understand about trust deed because if I talk about a society or a trust deed, they are formed, or you can say, I can say, they are governed by a trust deed, a trust or a society. They are governed by a trust deed or a society deed. If I talk about what are the objects of a trust deed, or what are, rather, I should say, what are the contents of a trust deed, it should rather contain the object of the trust. So I will just take the example which I took initially. Tata Steel wants to set up a trust, a eye clinic, wherein they will provide treatments related to eye diseases in Jamshedpur. Okay, so in that case, the object becomes treatment of eyes. Okay, and this is a charitable activities. So I will also deal with what do you mean by charitable activities. So these are a lot of definitions, a very detailed definition about what is charitable. So that is something which I will deal later on in the session. But the object in my example you can understand as treatment of eyes for the at a lower cost or at a you can say an affordable price. Then you have parties to the trust. Parties to the trust could be firstly there should be a settler, trustees, beneficiaries. Then you have trustees, which I talked about. You have there should be a settler, you appoint a trustees. Okay, trustees have power to administration and the management of the trust. Then will be beneficiary. If you are charitable trust, it should the beneficiary will be a general public at large or society at large. Okay, then there will be power of the trustees. That power, the power will include uh, management, administration, you can say calling out meetings, appointment of auditors for the purpose of signing the financials and filing of the returns, annual returns, and so on. So in case of a trust, if you're forming a trust, these are a few basic things which is taken into account. One thing which is not written in the slide, but I would like to add on, if you are a trust, you want to form a trust, as I said, there is a settler who will transfer some property to the trust. It and that using that corpus or the trust property, the trustee will use that for a charitable purpose. Let's take the example. Uh, Before the example, if when you form a trustee, when you have prepared a trustee, the trustee is required to be registered with the registrar. Okay, so when you go before a registrar for registering the trust, basis the corpus fund or basis the value of the property which is being transferred by a settler in the trust, our registration fees is determined, which you have to pay to the government for the purpose of registering the trust. You have two options. Okay, I want to start a trust. The purpose of let's say example 10,000. I want to start a trust with purpose of let's say the example 10 lakhs. Which is a better option for you to decide whether I should go with the corpus of 10,000 or 10 lakhs. If I talk about this, the first option, which is going with the trust, or we can say opening a trust with a corpus of 10,000, it is a better option. Why? Because in that case, the registration fees, or as I said, the fees that you have to pay to the government all the purpose of registering the trust will be computed on rupees 10,000. Like as an example, it is 10%. For example, I'm just taking a bad example, 10% rate. So it would be rupees 1,000. How it is computed? 10,000 into 10% is 1,000. This is the bare minimum on which you can pay for a purpose of registering a trust. On the other side, if I talk about your starting a purpose with rupees 10 lakh as a purpose, 10% becomes 1 lakh, which is the handsome amount for starting a trust, or for just to make the payment, or payment to the you can say fee for testing a trust. So depending on your activity and your purpose, you can decide how much amount you have to transfer to the trust for the purpose of opening the trust, keeping in mind the fees that are charged at the register level for the purpose of registering the trust. Okay. I will just take 1 minute pause if anyone has any doubt. Okay. Since no doubt I understand people are understanding the concept of trust. Very good. Yeah. So then I will start with, as I said in the previous slides, the object of the trust. If I take the example which we were referring to, Tata Steel Principle, what was Tata Eye Clinic, they transferred some property of a person in a trust wherein they will open an eye clinic for treatment of eye diseases in Mexico. So this is charitable activities as per your Income Tax Act 1961. Okay, so now the last 20 minutes I took to understand, give the background about your trust. Now I will just deep dive into the Income Tax Act 1961 and the implications, or the you can say the taxability provision as per the Income Tax Act. Before I start regarding your Income Tax Act, so there is section 215, section 2, subclause 15, or we can say section 2, subsection 15, which talks about your charitable purpose, or what do you mean by a charitable activities. So there is a broad definition which says that charitable purpose or charitable activity includes relief of poor. If I have to give one example, what could be a relief of poor? It could be a relief in a sense in the winters we are distributing, you can say, warm clothes to the beggars or the people who sleep at the streets. So that is something you can consider as relief of poor. Then you have preservation of environment. The famous example, Taj Mahal. If any trust is formed wherein the object, they will carry out all the activities to save the Taj Mahal from deterioration, or you can say from getting deteriorated. It is a charitable activities as per your income tax. Then you have education. Again, uh, a trust wants to, entity wants to start a school, college, wherein they will provide education facilities to the students at a lower rate. As an example, a private education, private school provides education, the become such, you can say 3 or 4 years of become at a cost of 5 lakh rupees, a private college. They will, you can say, not a government college, but a charitable trust who has started an education school, a college rather, for BCom studies, and they provide the same education at one level, which is a lower cost. Okay, so here it could be governed under the education clause of Section 50 and could be said that it is providing a charitable activities. Then you have preservation of monument. The Taj Mahal example which I took. Then you have yoga. Again, yoga, this is something uh, any entity, any organization providing yoga services, you can say to the people, then all the income it considered will be coming under your charitable purpose. Then you have medical. In the example which I took, Tata Steel Jakshato also started eye clinic. It will come under medical relief because I am providing some medical facility to the people, to the society at large. Okay. Then comes the advancement of any other object of general public utility. So in short, we call that GPU, general public utility. So what it is, it basically talks about how you have a trust, okay, and you are carrying out any activity which is not forming part of the sixth clause. Sixth clause means relief of poor, preservation of environment, education, preservation of monument, yoga, and medical relief. A trust which is not forming part of this an object which is not coming under this, but it is governing or you can say it is starting to the society at large. It will come under the subsidiary or you can say the residual clause of advancement of GP. Okay. So this is a very brief understanding of what do you mean by charitable activity as per the Income Tax Act. So you could recall in the initial I had asked you one question. ABC Limited is a company. They also provide some education facility to the employees of the, sorry, to the children of the employees. Okay. So they have formed a trust, the settler, ABC Limited transfers from your partners fund to the trust to form a school or a college wherein all the students, all the children rather, all the employee will be admitted and will cater to the education need of the children of the employees. Okay. It is only for the employees and no outsiders other than people who are not the employees will not get the option to admit their children in this school. So it is only for the employees. Will this be considered as a charitable activity like Section 215 of the Income Tax Act? The answer would be no. Because as I said, and I was stressing on this from the very initially, that any trust is considered as a charitable only when they provide benefits to the society at large. Okay. In this case, since the benefit was restricted only to the employees and it was not available to the employees, or rather, it was not available to the society at large, then it is not a charitable activity as per your Income Tax Act. So, since it is not a charitable activities, all the benefits that is available to a trust as per your Income Tax Act 1961 will not be available. Yeah. Okay. So this was a very brief uh, understanding about what you mean by a charitable activities and for income tax law. So before I deep dive into more about trust, a thing which since I have worked on the topic of trust for more than a year or so, one thing I could say for sure, charitable trust is one of the most complex topics of the income tax identity. Because if you read the sections of PAIR law, the PAIR Act, the wordings are very complex, very difficult to understand. Okay. There are no much chartered accountants or advocates who practice or work on trust because it is so complex. And since most of the societies or the Section 8 companies who are NGOs or NPOs are working for not are not making any profits, rather they are giving back to society. The practicing CAs or the advocates don't get the option to charge, uh, you can say, sufficient fees from the client because the trusts are not in a position to pay sufficient fees because they are not a profit making entity. Okay, so whatever donation funding they receive, they have to spend. They spend the entire for charitable activities. So this is also one of the reasons why we will not see uh, a lot of CAs uh, practicing on the topic of charitable trust. If I talk about your Chapo or your East India, you will not get a lot of CAs. I'm not saying there are not no CAs working. There are few good CAs working, but you will not get. It's not like that. You will get a good amount of crowd in the Chapo you can talk about or in East India who are working on the topic of charitable trust. Okay, so I will just proceed with the discussion on the charitable trust and income tax in 1961. There are a lot of conditions. So, yeah. So, before I started, from income tax perspective, a charitable trust gets a lot of benefits. Okay. A lot of exemptions from paying any taxes, a lot of benefits. But again, they are subject to a lot of conditions. Okay. It's not like uh, you have opened a trust and you are carrying out the activities and your entire income is exempt. There are a lot of conditions which has to be fulfilled in order to ensure that the income of the trust is exempt from taxation. Firstly, your object should be a charitable. We have discussed this in detail. What do you mean by charitable as per section 250? That is, relief of poor, medical relief, education, yoga, preservation of environment, preservation of monument, and residual cause of GP. So these are basically your eight uh, conditions, 5 to 6 conditions object uh, for which you have to get you have to register. If you are falling under this, then you are a charitable activity, you are a charitable trust, and you are eligible to take the benefits of 11 and 12 subject to another condition being fulfilled then is a condition of registration. So we have talked about your Societies Act 1860, Indian Trust Act 1882, or I've talked about your Bombay Act of 29 of 1950. Okay, so they are state specific or central trust, okay, which carry out the activities or which govern the work, functioning on the administration of trust or society in India. From the income tax perspective, there are separate provisions or laws which says that if you are a charitable trust means you carry out any activities as per section 215. You carry out other activities as per 250, then you have to get registered in the Income Tax Act also for the purpose of taking the benefits of Income Tax Act. So there's section 12A or 12AA or 12AB. Okay, so these are specific sections which talk about you registering a trust. Okay. So earlier it was 12A, then 12A got abolished, then it came 12AA. Now 12A double got abolished, then you got 12AB. So it's like that. So basically it talks about a trust for to get registered in uh, India for the purpose of taking the benefits as per Income Tax Act 1961. Then comes to the third point, components of the income should be non-charitable or should not be non-charitable or commercial. This is very important. Uh, why a charitable trust is the topic is very important in taxation because a lot of people, given the case you have a lot of benefits available to a charitable trust in India, your income is exempt from taxation. A lot of entities, what they do is they form a trust. At the time of forming a trust, registering a trust, they will say, I'm a charitable and trust. I carry on, let's say, take for example, education purpose. I will open a school. Okay, and I will carry out the charitable purpose. I will provide education at an affordable price to the poor students, poor children, the tribal people. So I'm a charitable activity. I'm carrying out a charitable activity, so I will get the benefits. That particular trust has taken a restriction as per 12A or AA or AB. But once the trust has started functioning, started its business or activity, it started taking students. You can say normal students also. They were not poor rather and they are charging fees which is at per at a private school. Okay. Let's take example, a class 5 student from a private school, they charge around 50,000 per annum for a class 5 student. That trust starts charging around 45,000. Okay. Which is almost parametric, I can say almost equal to 50,000 which is charged by a private school. In this case, there is a lot of issues the income tax department can challenge that the charitable activity or the commercial activities being carried out by the trust, the charitable trust, is not charitable, it is on commercial basis. And there's a risk of your registration being cancelled, the income that you're claiming as exempt will become taxable. So, one thing that has to be kept in mind when you are carrying out any charitable activity or forming a charitable trust, you should carry out the income, the source of income should be a charitable purpose. You cannot use that charitable trust for carrying out the activity which is a commercial basis. Okay? Now, once you have collected the income, if I talk about the eye clinic, uh, I'm getting donations from Tata Steel. I'm getting donation from Indian Medical Association. Let's say the example. I'm getting donation from another institute. Okay, I have income. I have got donations. I have funds. Let's take an example. 100 crores, 100 CR. I have in a particular year. I have 100 CR as donations or in receipt from the patients. Okay, income tax law says if you are a charitable trust, then 85%, so mark my words, 85% of your income you have to apply means spend towards the object of the trust. In my example, you are a trust, you are a charitable trust, you have got rupees 1 crore in a particular year. It could be in the form of donation in India or foreign donations. You have received from voluntary contributions. You have received some receipts from the patient. Since you are running a clinic, you are getting receipts from the patients. You have got receipt from the patients. Okay. You are getting income from another sum. It could be you have some FD income. Sorry, just allow me 1 minute. Yeah. So you have a FD with bank. You are getting FD interest. All taken into account, 85% of the total receipt, total income of the year for a trust, you have to spend towards the object of the trust. Out of 100 CR, 85 CR, 85 crores, you have to spend towards the object of the trust. If you are an eye clinic, you have to spend towards the treatment of eye disease in Jamshedpur, 85 crores. If you are into education, you have to spend 85%, 85 crores to provide education to the students. Okay? So this is known as your application of income contribution level 1. Now the another question is someone can ask, what about the rest 15%? If I have 100 CR, if I spend 85 crores, what about 15%, 15 CR? That is my income. This is the benefit which the trust gets. 15% of the total income gets exempt, or you can say don't worry about that. You keep that 50% aside. Remaining 85% you have to spend. Income tax department will never question you regarding that 15% of the total income or the receipt of the year. Okay, this is a brief about your application of income. So, what I spoke about, your object should be charitable. You have to get registration in the Income Tax Act. The income should be from a charitable purpose. Okay, you have to spend 85% towards the object of the trust. Okay, now a very important, or you can say a very important concept comes in. Uh, let's take the example, I clinic. I have received 100 crores from patients, donations, CSR funding from institutes. I want to, I have a building, but I want to construct another building uh, which will be used for providing treatment to the patients, high patients in Jamshedpur. Construction of a building is something which will not be completed in like 1 day, 2 day. Correct. It will take some time. However, when the building is constructed, the final finishing and the placement of your technologies, your equipment, medical equipment will take time. So you can say 2, 3 years can go uh, in constructing a building and setting up the equipments, medical equipments. Okay. So out of the 100 crores which I received in year one, I have thought that these 50 crores from that 100 crores will be spent in the coming 3 years for that particular building. Okay. So I have kept that aside. Income tax law says that 100 crore, 85% of the 100 crore, which is the total income, I have to spend towards the object of the trust, or you can say towards the activity for which I have formed. In that year, I have spent 85 crore, but I spent only, you can say, 35 crores. Okay. So 50 crore I have set aside for forming that building. So I have not spent anything on that. I spent just 35 crores. So income tax law says that if you have not spent less than 85% or you have spent less than 85%, the shortfall between the amount you have spent and the 85% of the total income is your income and you get tax. So in year one, you have received 100 CR, 85%, that is 85 crore you have to spend for the object of the trust. You have spent only, let's say, example, 35 crore. 50 crore you have not spent, you have kept aside, you are saying that I will spend in after 2 or 3 years for constructing the building. Income tax law says, say 50 crore get taxed in the year. But don't you think this is a bit harsh on the trust because on one side we are saying that if you're trust, you have to provide benefit to the society at large. I am doing that activity, forming, constructing a building, placing the equipments to provide, you can say, benefit to the society. And on the other side, department income tax is saying that since you have not spent, your income will get exempt. Income will not get exempt. It will get taxable. So to curb this, to ensure that this is not there or this amount is not tagged in your hand, income tax law provides for a particular section 11 wherein it says that if you have any situation wherein you are not able to apply your income towards a charitable purpose, which is less than 85%, because of any reason, like you are, in my example, you are forming or you are constructing a building, and because of which you are not able to spend that money. In that case, do one thing, fill a form 10. The name of the form is Form 10 with the income tax department saying that, see, in a particular year, I have received 100 crores and 85% of the 100 crores, 85 crores I have to spend, but I have spent around 35 crores, 50% I have not spent. This 50 crores I have not spent because I will use this in the coming years for constructing a building, which is my object. Okay. So kindly allow me to set apart. So there is a word known as set apart or accumulate. So kindly allow me to accumulate or set apart these 50 crores so that I can spend in coming 2 years or 3 years. And kindly don't tax this amount in year one. So you file a form then and you give these details. After you give all the details, that particular income will not get taxed in your year. After year two or year three, you have to spend that amount, and that is a particular compliance with the income tax law. Okay. In the same example, okay, I will give you another concept of income tax law. You have received 100 CR and you have not spent 30 50 crores. Then you have filed a form 10. Say that I will spend this 50 crores in coming 2 or 3 years. So I have this particular trust has the 50 crores. Can particular trust use this 50 crore, the trustees can use this 50 crore for doing some business, or you can say uh, invest in something like invest in uh, you can say stock market and earn some capital gains, or invest in income share market and earn dividend, or invest in other places. So it is not required. It is something which is not as per law. Income tax law specifically says that if you have not spent particular income in a particular year, you have filed Form 10 saying that I will spend in coming 2 years, 3 or 5 years. That particular income you have to invest as per a mode which is prescribed in the Income Tax Act. So there is section 11 of section 5. It talks about a lot of modes which is given. It talks about just particular you can say mode as per which you have to spend your 85% shortfall. One of the examples could be FD, which is given in your section 11.5, that if you spend the 50 crore, invest the 50 crore in your FD. If you invest that 50 crore in your FD, that is a compliance as per income tax law. Okay. Then comes your concept of donation, annual donation. Annual donation, nothing but a trust, as I said, trust is enjoys a lot of benefit in income tax act. So the people, we are Indians, so we know how to take out lacunas, pick out lacunas from the provisions. So trust, people have been forming trust, charitable trust to claim exemptions. These trusts are formed on paper, just showing that they are charitable, but in nutshell, they're not charitable. They are doing some commercial activity, okay, which is against the law. Many times, many trusts receive some donation, and we are not aware from whom they have received the donation. It is known as anonymous donation. Anonymous donations are donations which the name of the party from whom you are receiving the donation, the contact details, the address, name of party, you are not aware of. Income tax law says if a trust receives a donation which you are not aware of from where you have received, it is get taxed in your hand to the trust. Even though you spend 85% of the donation, you have received 100 crores as anonymous donation in a particular year. Even though you spend 85%, still that is subject to your income tax 30% at the rate of 30%. You have to pay taxes on the annual donation, even though you're spending 85% on. Okay, so this was another brief understanding about trust. So I believe and I have just 4 minutes time to complete the session. Let me just wrap up on what I have discussed. We have discussed on the charitable trust. What do you mean by charitable trust? The legislations in our societies at 1860, you have Indian Trust at 1882. You have companies like Section 8 companies which carry out the charitable activities. Then we talk about trust deed, or structure of a trust, settler, beneficiary, trustee, is a trust for the benefit of the society. Then you have we are talking about charitable trust. What do you mean by charitable? Again, we spoke on section 215, we discussed, which talks about the definition of the activities which are considered as charitable. You would recall this relief of poor, yoga, education, medical relief, preservation of environment, preservation of monument, general public utility. I gave the example. ABC Limited is forming a trust to provide education facility to the children of the employees of ABC Limited. Is it a charitable activity? No, it's not a charitable activity because it is not catered to the, you can say, to the general public at large. Okay. Then we spoke about what are the various conditions. I just spoke about there's a lot of benefits which a trust gets. Your 15% income is exempt provided you spend 85% of the income towards the object of the trust. You have to take registration in the Income Tax Act to claim that benefit. If you have not spent 85%, you file a Form 10 and you set apart or accumulate the remaining amount and spend in coming 5 years. Okay, then you have to spend as per 11.5. FD is one of the classic examples. Then you have concept of anonymous donation. You don't know from where the person, from whom that you are getting a donation. Okay, that gets taxed at the rate of 30%. Okay, so given the time crunch, uh, I would like to just stop here because I don't have much time left. Anyone having any questions can let me know. I will be happy to answer. Parveen, since no questions are there, so I would like to conclude the session.
Okay, sir. I think there is no question. So we'll just conclude the session. Thank you so much, Mr. Manish K. Agarwal, for that comprehensive and enlightening session. Your deep dive into the tax implications and incentives for charitable trust has really provided us with a clear understanding of how strategic tax planning can significantly enhance the impact of philanthropic organizations. Your insights into the practical aspects of leveraging tax benefits for charitable purposes have been immensely valuable, and we are really grateful for the time and knowledge you have shared with us today. Thank you once again for your contribution to this faculty development program. Thank you, sir. And
Thank you.
ladies and gentlemen, so as we come to the conclusion of this enriching 5-day faculty development